Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is January 17, 2023. Coming off a 3-day weekend. I hope you had a great one. But I'm going to go over your three threes for the week. I'm going to go over our major asset classes, their performance, and our three favorite on a long-term basis. I'm also going to go over on a short-term basis how we are positioned on both equities and bonds. And I'm going to go over our top three market movers for the week. So let's jump on in.
Okay, this week will be a holiday shortened one with U.S. markets closed on Monday for MLK, Martin Luther King Day. However, it will still be a busy week because we have a lot of corporate earnings, retail sales coming out, and PPI data this week. But first, let's go over the performance of the major asset classes on a week and a one-year basis. For the week, the only red was the U.S. dollar, which was down 1.6. Bonds were up almost 1%, and equities were ranging anywhere from 2, 3, 4, 5%. Real estate up 4.4. Gold and commodities were also in the green. Bitcoin was the big winner at 17.6, but if you remember last year they were down over 65%. So we shall see if that will hold or if it's a bear market bounce. On a one-year basis, we still only have the U.S. dollar, gold, and commodities as your three big winners. Everything else is still deep in the red. All right, let's go over the top three major asset classes on a long-term basis. Keep in mind, we went over last week that we do look at about 80 different sub-asset classes, but the three top major asset classes remain the same. We have T-bills, gold, and dividend equities, and those three are very defensive in nature. So we still, even though the markets are moving a little bit, we still have to keep in mind the overall theme is still pretty defensive. All right, let's look at the bonds on a short-term basis. As a reminder, last year bonds had a bad year, down 12.8. But so far, so good this year. Right now, they're up 3% for 2023. And if you remember right back, we started nibbling and buying selective bonds back in the middle of November. And as yields started to drop, the bond prices started to go up. So we're sitting at some nice little gains on our bond purchases. So we'll see if that continues. All right, equity is a slightly different story. We've, over the past year and a couple of weeks, we've gone through protect mode 4 times as we were getting lower lows and lower highs for the remainder of the year. So far, so good. We're starting to kind of get a higher low. Now, as we broke this resistance zone, we're back into adding a very selective equities here. We need to get above 4,100 on the S&P. There's a huge kind of resistance zone here, but if we can get up over that, then we'll have possibly a higher high with a higher low. That would be very promising for equities in general. All right, let's go over the top three market movers for this week. On Wednesday, we have U.S. retail sales and PPI data for December. We had a very good start for consumer spending throughout the holiday season. However, it looks like the projections are going to have fallen for the month. So even though we had a great start, we had a not so great finish. Also on Wednesday, we have the producer price index, and that tracks inflation from the standpoint of goods, the manufacturers and wholesalers. And their estimates are for it to be flat, and that's following a couple of 0.3 gains over the last 3 months. So that's not a great number, but we shall see what the numbers come in at. On Thursday and Friday, we have housing data. We get updates on the housing market. Housing starts and building permits on Thursday, and existing home sales will be on Friday. The number 3 market mover are earnings. Earnings season continues with the remaining banks reporting this week: Morgan Stanley, Goldman Sachs, Charles Schwab, PNC, and Discover. We also have Netflix, Procter & Gamble, and a couple of the airlines also scheduled to report this week. Now, even though it's top 3 market movers, we do have one that could be a wild card, and that's the debt ceiling this week. There is no specific date, but Janet Yellen has warned that the U.S. could hit its debt limit this week and called on Congress to either raise or suspend the debt ceiling this week ASAP. So we shall see, but that could be a possible wild card that could move the market one way or the other. That's it for this week. Thank you for joining us. Our next update is Monday, January 23rd. As always, continue to follow, subscribe, and like, and we shall see you next week. Have a great week trading.